you gonna do, fiat dollar? Or CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild on you?
Welcome in. I am the CryptoBullGod, and in today's video, I am fearful, but not in the way that you might think of at first. You can find me on Twitter right here. Whoop, over 10,000 followers, had a decent increase over the last video, so thank you very much for that. You can find me on Twitter at CryptoBullGod. You can find me on Tradingview at CryptoBullGod. You can also find me on YouTube here at CryptoBullGod, as well as Instagram at CryptoBullGod. Just a quick disclosure that none of what I'm sharing is financial advice. I'm looking to educate, help, and spread sound technical analysis to the community and to help others in making informed decisions. However, the ownership falls on you to make your own personal financial decisions. You know, before we get into things here, please consider subscribing to the channel, dropping a like, and leaving the comment. I appreciate the engagement. And it also helps the YouTube algorithm to spread my content throughout the community. So what do I mean by I am fearful? So let's go to an earlier tweet that I had today. I tweeted this out 29 minutes ago. To be honest, I am fearful. Fearful that many, despite what I and others share, will be shaken out. I will continue educating what I honestly see in the charts. Yes, I am very fearful given this sentiment that exists in the market. There's a lot of arrogance taking place, a lot of confidence / arrogance from bears, crypto bears that think we're entering some massive crypto winter here and we're going to be in a massive bear market. And I'm also just seeing a lot of just general fear and saltiness, unsuredness, and I really am fearful that a lot of you will be shaken out. So I do hope that today's video with the charts that we're going to take a look at will help you to appreciate where we're at currently within the cycle, and will increase your level of confidence that things are going to turn sooner than what most are thinking at this point. So let's get into the first chart here. This is a 12-hour view. Okay, this is a 12-hour view, and as you can see here, this is a view that I've hit on in the prior two videos, and I'll leave a link in the description for the video that I really think you should check out on the 12-hour chart, which is the chart no one's discussing. So as you can see here, we're in a general downward channel, right? The 1, 2, 3, and 4, all of these represent lower highs, right? The high here, and then the second high here. The second high is lower than this high. The third high here is lower than this high. And the two red circles represent lower lows. Okay, so lower highs and lower lows are the basic building blocks of a bearish trend. So what we want to see in the shorter term is we want to see a trend reversal here. Here's the issue I have though. I think too many people, if all you're doing is zooming in on this chart and you're hyper focused on shorter term time frames like this, you need to get your head out of the ground and see the entire forest, okay? And if you're looking at the entire forest and you're zooming out on a more macro perspective, it's quite a different picture, and we're gonna get into that. But I just wanna show you, in general, on a smaller time frame, the general downtrend that we've seen in the bearish price action that we've seen in Bitcoin and crypto all in general. Now let's get into one other view on the 12-hour chart. This is more of me reiterating what I indicated in the prior Bitcoin chart that no one is discussing, and all the historical significance within this chart. Okay, I'm going to reiterate something. Go back and watch the last video that I'll leave a link in the description for if you haven't already. There's really two videos to really help to put this in context. This green horizontal line is where price action on a 12-hour chart crossed below the 200 simple moving average. And what we historically know from the video that I put out there is that on average, removing the outlier periods where there's been extended bear markets and a true crypto winter, when we remove those outlier periods and look at the time in which we've remained under the 200 simple moving average, which is this pink line, it spans 51 to 132 days on average. And so what I've done with these two gray horizontal, I said horizontal lines, clearly I don't know the difference between horizontal and vertical lines. These are vertical lines, my friends, vertical lines. So this is a green vertical line, not a horizontal line. I'm not going to edit that one out. So these are two gray lines, and as you can see with the green rectangular box, this time frame here represents the time frame on average, historically, what we're going off of, that we would anticipate price action to remain below the 200 simple moving average. And it would also represent the time that we sort of have to wait until Bitcoin gets back above the 200 simple moving average and on the 12-hour chart, and begins to build bullish momentum. And as I've always said on my channel, as you begin to see a turn in the charts, whether it's bearish or bullish, when you're looking on smaller time frames, once you see the momentum, in this case, build for a bullish narrative on a 12-hour chart, that will bleed into the one-day chart, which will bleed into the one-week chart, which will bleed into the one-month chart. So the smaller time frame price action bleeds over into the higher time frame. So that's something to watch for. So really what we're saying here is we can expect on average for price to remain below the 200 simple moving average, which is just now beginning to curl down. It's around 52,000. We can expect it to remain below there for sometime between the 24th of January of this month, which we've already passed, and the 15th of April. So there could be extended time below this time period, something to keep an eye on. Now let's actually zoom out on a monthly time frame. Okay, once again, if you're hyper focused on this in the short term of what's going on, and you're literally burying your head into the ground, you need to lift yourself up, freaking fly up into the sky and see the entire forest, because you'll gain a much different perspective in terms of what's going on. This is a monthly view. What in general is concerning about this view? Now, as you can see here, what the blue arrow is indicating is that we are creating the basic building blocks of a bullish narrative. We see higher highs and higher lows. Let me actually remove the blue arrow to show you this. So, drawing it out, we can see we had this huge price movement up. We created a high right here, came back down, created a low at 28,000, came up to 69,000, and have since come back down to around 33,000. These are higher highs and higher lows. There's nothing alarming about this chart. Now, one other thing that you should consider when you're evaluating this chart on the monthly view is that anytime price action on a monthly view on Bitcoin has been around, in this case, what is the 20 simple moving average, it has presented an awesome buying opportunity. If you bought here, great buying opportunity. If you bought anywhere in here, great buying opportunity. I would hypothesize that if you bought anywhere in here, it's going to be a great buying opportunity, right? So it's just helpful to zoom out on the chart. Now, the other thing we want to quick see, I know I wanted to touch on this real quick on this view, we do see some negative divergence on the RSI. Okay, so we want to see at some point for that to be negated. You can also see two horizontal gray lines. Let me move my face out of the way. You can see two horizontal historical gray lines here that are areas of support. We really don't want to see on a monthly RSI view for the Bitcoin RSI to dip below where it's at right now. It's kind of resting on support at 52. Let's zoom up on it. We're resting right at 52. We really don't want to break below 52 because look what happens when we break below 52. This price action here, when the RSI broke below 52, it corresponds to this massive drop here. This dip here was the March crash of 2020 right here. So we don't want to dip below this gray line right here, this guy right here, okay, and we're resting right on it. Let's go to a different view here. Now this is still on a zoomed out time frame, and what we're looking at here is a 2-week chart. Now, for those that have basic TA knowledge, I'm going to ask you for some pattern recognition here. What do you see in the chart? What I see is the formation of a potential bull pennant / ascending triangle, right? We had a massive rise up in price, and we've since been, guess what, ladies and gentlemen, despite what you might think is going on, and if you're fearful, all that's been going on is price consolidation. Once we peaked here back in, what was it, March of 21, it looks like, or maybe it was, I don't know, it looks like it was actually April. of 2021. We've since consolidated. Yes, we did create a higher high at 69,000 back. It looks like back in November of 21. But basically what's been going on is we've been consolidating within this range here, and this formation here is an ascending triangle, and you could also argue that it's actually a bull pennant. Now, one important thing to point out here before we flip to the next chart. This candlestick is our current candlestick. And again, this is on a 2-week view. It just helps to consolidate price action. Anytime you zoom out, you're able to kind of consolidate things and see a larger time frame perspective of what's going on. It also generally, depending upon how much price data you have, it lends itself to a more credible view. This candlestick is not done printing. This candlestick, as you can see, pointing like you can, I do this all the time, I'm pointing like you can see me. As you can see, if you look at the bottom part of your screen, the new candlestick will print on January 31st. This implies we still have 4 more days of price action contained within this candlestick until it closes. Price wicks are an expression of what? Volatility. So when we draw this pattern, if we have a wick, if we zoom in here, if we have a price wick that comes all the way up to 37,000, we can move this up and the wick can go below the black line. We just can't start to draw any lines on our chart where we're drawing them through candle bodies. Okay, we can't do this. Okay, that's not valid. But this right now is very valid because the candle body is resting on the black line, right? So let's see how this 2-week candlestick closes out. Let's see how the end of the month essentially closes out. And let's see if this pattern holds, because right now, you know, as seen on the prior chart and as seen on this chart, not only do we have a high here, a higher high here, a low here, and a higher low here, basic building blocks of a bullish narrative, but we also have an ascending triangle. So it'll be interesting to see if this plays out. Now, one thing I wanted to show you, this is a really neat trick on TradingView. If you're struggling to see what I'm seeing, what you can do is you can invert the chart. So what you're doing is, and I'll show you how you do this. This is the same chart we just looked at, literally the same chart, okay? The formation should look similar. But what you can do is you can right click here, and all it does is it literally takes the chart and just flips it upside down, okay? So all the price data, instead of price moving up and increasing in value, price is decreasing in value if you go up and increasing in value if you go down. You just invert the chart. See how I right clicked on TradingView and clicked invert scale. Now look what we see. What is this, ladies and gentlemen? Well, this looks like the formation of two things, okay? First off, this looks like a bear flag, whoop, and a bear pennant. Correct me if I'm wrong here. Drop a comment if you disagree. Now, doesn't this, let's just focus on what's drawn within this black triangle. Does this not look like a descending triangle? A descending triangle is a bearish price pattern. But in this case, because we have inverted the chart, it is bullish for us. Because if price were to consolidate in here, creating this floor and coming up and creating these lower highs, eventually for a descending triangle, it breaks down. But remember, we've inverted the scale. So if you look to the right of the screen, and I'll get my face out of the way so you can see, as we move down, price is actually increasing in value. Again, this is why it's important, if you're not following me on Twitter, to follow me at CryptoBullGod. I just tweeted this chart out today. Okay, oftentimes, many times, I am tweeting out charts that I never show in my videos. So it's very critical that if you value the technical analysis I bring you in these videos, you give me a little follow on the Twitter. All right, so let's actually turn our attention to Ethereum. Now, there was one concerning thing on Ethereum that I had pointed out in earlier tweets from months back that didn't leave me feeling super confident, and that was this. Look at the RSI. As we were creating higher highs here in price action on Ethereum, and I should say this is a weekly view, the RSI was creating lower highs. We had some negative divergence within the RSI that eventually now has played out. Although, one thing that I wanted to point out is that we are, and I'm not going to scale back, follow me on Twitter to take a look at the chart that I pointed out, but basically the RSI on the weekly that we're sitting at for Ethereum at 36 is at historical lows. We are so oversold on Ethereum. Now, things can remain oversold. Okay, it's very important to understand that just because something is overbought or something is oversold, What that does not signal to you, if I say that, is that you should immediately go out and remortgage your home and invest everything you have into crypto because we're oversold. That's the dumbest thing you can do. What it is telling us is we've reached price levels in this case that are oversold, and at some point they will want to return back to a median level at the very least. Okay, things will want to bounce back in the positive direction. But keep in mind, again, things can remain oversold for an extended period of time before they start to level out and reappreciate in value to a more median value, like I said. But it's very important to note that we are very oversold on the RSI on the weekly Ethereum chart, and that's not going to last forever. I view it as a massive, never financial advice, but a great buying opportunity. So let's actually just take a look at the price data. So what do you see? I mean, as you're evaluating this chart, what do you see? Well, I'll tell you what I see. We see this massive leg up. We created a high right here, right? We created a low, looks like down at about 1,700. We came up similar to Bitcoin and created a higher high at about 4,800, 4,900. And we've since come down and created another low. But keep in mind, this low here at like 2,300 is higher than this low. So we have two higher highs and two higher lows. And what is that? What are higher highs and higher lows? The basic building blocks of bullish momentum and a bullish narrative. So again, nothing super concerning here, okay? There's always the possibility we could break this trend line and double bottom, but I do not expect 1,700 to break. In fact, I'm personally leaning towards the higher low scenario playing out and us beginning to continue to consolidate and move upwards. That's just my own personal opinion. This chart is the total cryptocurrency market cap. Would anyone care? I wish this was sort of like a live charting class. Would anyone care to volunteer and share what they see in the chart here? You may drop a comment, pause the video, and share that at this time. Okay, so if your response was that you're seeing a high here and a higher high here and a low here and a higher low here, yes, you would be correct. So all of the cryptocurrencies, the little tokens out there, okay, if we combine it and we look at what the total value is and we chart it, what it's telling us is, once again, there isn't anything overly concerning here because we have a higher high, we have higher highs and higher lows that are being created here, right? So to me, call me crazy, but similar to some of the other charts we've evaluated, this sort of looks like price consolidation, and things have a very high likelihood of continuing to churn up. Okay, that's what I would say. Now, let's look at the total to market cap. This is actually even more apparent. So what this is it's looking at essentially all the altcoins. So it's this view, okay, it's this view, but it's then stripping out Bitcoin's market capitalization, and that's what you're left with. So you're left with Ethereum and all the other altcoins like the Holy Crypto Trinity. Holy Crypto Trinity for life. So again, once again here, the reason I'm pointing out this chart, okay, on a serious note, the reason I'm pointing out this chart is because I want you to have the ability that when you're evaluating a chart or when things are going on in the market and you fearful, you need to have the ability to know what charts to evaluate to get comfortable with what the narrative is. You can't go on Twitter. And see what people are tweeting and base your narrative based on that. You can't base it on what your friends think. You have to do the education and understand what it is you should be looking at, and you should value other content creators in this space like myself to help leave you breadcrumbs in terms of charts and data science models that you can look at. And one other missing piece from this video, I call it a missing piece because I'm going to create a second video, something I've alluded to quite a bit on Tradingview, on Twitter, is that I do plan to share the data science models and the charts that I am looking at that leave me feeling very convicted that we have not topped. Just because the time frame has expanded, okay, and I tweeted this out earlier, just because things are taking longer than expected because there's been consolidation, just because prices have gone lower that I and many others who I respect in the space felt would happen, doesn't mean everything that I didn't share with you isn't valid, and the other data science models and charts I'm looking at aren't valid, and we still don't have one more euphoric leg. Just please keep that in mind. So please subscribe to the channel and await that other video that I plan to put out there where I will methodically walk you through the charts I'm looking at that leave me feeling very convicted that there's one last leg to go, and it's just this is the process that weeds people out, unfortunately. Two other charts, very important charts that I want to get into. They are actually not cryptocurrency specific, but they are cryptocurrency related because that's why we're all here, right? This is a chart of the DXY, the US dollar. Now, historically, what you have to understand is that in general, when the US dollar has depreciated in value, Bitcoin in the cryptocurrency market has appreciated in value, and vice versa. Now, what are we looking at here? Well, first off, the dollar's been around for a while, right? Fiat's been around for a while. So we're zooming way out and we're looking at a monthly chart. This is a red line of resistance. Look at how much historical significance this has. When we topped out here back in 2001 and 2002, we topped out similar here on this red line back in 2017, back in 19, it looks like in 20, and now we're getting real close to this red line of resistance. It is very possible, and in my opinion, very likely, based on the fact that this red descending line of resistance has held price down on the US dollar, that we are close to topping. Now, there's a couple other lines here that I wanted to point out. First, and these green, by the way, these green lines here, horizontal lines, they're historical areas of support. So they're areas you want to watch for when the dollar devalues. You want to see around the 92 and 89, 88 area how much support they provide the dollar if it just cuts right through it like a knife through butter. But historically, these are areas of resistance and support. That's why they're there. Right now, it's support because price action is above it. This black line, this is something to watch for. As you can see, we had a touch here. Let me draw this for you. We had a touch here. We had a touch here. You can see that once we broke below here, look what happens. It acted as resistance. This is basic technical analysis. When you have an ascending line of support like this that has held support, once price action like it has in this fashion has broken below the black ascending line, excuse me, it then acts as resistance. We are right now, check this out. Not only do we have the red descending line of resistance, we have now a black line of ascending resistance. So we have 2 points of price confluence that should act as resistance. So my hypothesis based on this is even if we get a price wick on a monthly candle up here, it's not going to hold support. It's going to end up dropping down, okay? One other thing I wanted to point out on this chart real quick, this is an area to watch for in my opinion. If things sort of play out the way I'm currently anticipating, this is a key area of support right here where this green circle is around 80. So why is it a green area of support? Because as you can see, once again here, this support, right on this, excuse me, let me make this a little bit more clear for you. Right here, see it? Support and then support back here. So if we begin to plummet in value, this is an area to watch for. And I believe on the next chart, I've further drawn another area of support that provides further confluence with this area here. So let's zoom in. Yes, I did. So one of the other things, there's a couple things to point out on this chart. I want to make sure I'm being very clear here. So first off, let's ignore this price action here. Let's take a look at this green line. This green line, and we're going to say, sorry I keep moving my photo around. It's kind of frustrating. This green line is around 79.80, okay? 78, 79, 80, okay? One of the things that's important in technical analysis is not to get too pretty. Don't get too cute, okay? If I have a line of resistance at 79.8, maybe there's some support at 79.4. Let's not be too cute here and too specific. The point is there's an area of support right around 79, okay? Now that provides further price confluence with this ascending gray line of support here if we were to fall in value. So right around this 80, 79, 78 area is where I would watch for further support if price action begins to fall. So what's going on here? What did I actually draw out here? Well, let me explain this really well because this is the meat and potatoes for this chart. So it's very important that you understand what it is that I'm covering here. And by the way, this video is going over 20 minutes. Thank you for sticking around. I hope you've been finding the content helpful. If you have, don't forget to leave a comment and drop a like, because it's going to help me out as a content creator. This blue circle, this blue oval, this is where the dollar plummeted in value. And if you were paying attention earlier, one of the points that I raised was that if the dollar is plummeting in value, Bitcoin and crypto has historically gone up in value. Well, look at the time period. Where are we at here? This was 2017 through 2018. When was that? 2017 through 2018, that was this price action right back here, okay? That was all of this stuff. So as Bitcoin was going up and all of crypto was going up, the US dollar was plummeting in value. Now keep in mind, we hit this red line of resistance here. Again, I pointed to the screen like you're with me in a classroom. We hit the red line of resistance, and that's where we began to plummet in value. Well, what's going on here? As you can see on a monthly view, we wicked above the red line. Again, price wicks are an expression of volatility. We didn't get any candle body closes above the red line. We just had price wicks. But once we topped out here at this red descending line of resistance, we plummeted in value. Well, when was this? This was during our another bull run from March of 2020 into the summer of 2021, and we all know what happened. We had the beer virus, okay, March of 20, and crypto increased dramatically in value into the spring, summertime of 2020. Now, what is happening here? Now, I've already spoken to the fact that we're hitting two critical areas of price confluence that should provide resistance that I am hypothesizing will result in the dollar correcting in value and decreasing in value, which will provide support for the cryptocurrency market to increase in value. So what I've drawn out here, it's a very basic tool in Tradingview. And all I did was, it's called a bars pattern. So if I copy the price action in 2017 and 18 and lay it over here, it gives you something similar to what I'm showing there. And that's all I did. Now, am I telling you that this is exactly what we're going to see in this purple line? No, that is not what I'm saying. What I am saying is that we are hitting a historical area of resistance. I do expect the dollar to fall. How much it'll fall, I don't know. No one knows. But I'm using past data to sort of hypothesize where it could potentially go. And I'm also using other areas of price confluence here to tell me where it could potentially bottom. So it is something to watch for. Watch the DXY very closely in the coming couple months here. Because again, I am hypothesizing that we are at or near a top in the dollar, which will provide support for crypto and Bitcoin going into the rest of this year. So I really hope that you found the content today helpful. There were a lot of charts that we covered. I hope that I was able to explain everything very well. If you did, share it with at least one friend. Subscribe to the channel, drop a comment, and leave a like. So until next time, spread awareness and carry the education forward.